Everybody, welcome to today's fundamentals. Hello, Peter.
Hello.
What's new in the FX market?
Well, we had practically the US dollar dropping slightly on Friday, tended to rebound during today's Asian session. The main fundamental issue here is definitely the debt ceiling and the possibility of the US defaulting on its debt. There was a breakdown in the negotiations between Republicans in the White House on Friday. Okay, there seems to be some common ground that both sides agree that expenditure will have to come down. There is, though, some substantial differences as to whether the defense expenditure will also be brought down or not. I would expect that we may see some progress made today as US President Biden and House of Representatives Speaker McCarthy are speaking. On the other hand, we have to note here that US Treasury Secretary Yellen once again hit the alarm bell, noting that the US may defaulting by June 15th or so. So it's a big issue. Stakes are high, uncertainty is high. So overall, we expect this to continue to be a market-moving issue, which is going to be closely watched by traders. I would be noting also during the weekend that we had, actually since Friday, some quite hawkish comments by ECB President Lagarde, where she practically stated that the bank will do whatever is required to actually keep price stability and that there would be no trade-offs with growth. So practically the bank is solely targeting inflation. And I think that more or less tended to be quite hawkish. Should that hawkishness be also evident in today's comments by ECB policymakers, we may see the euro getting some support. And last but not least, still on a fundamental level, I would be noting that there seems to be a flare-up in tensions in the US-China relationships once again. This time it's about microchips. Should that be extended, we may see market wars intensifying and could be weighing on risky assets. I would be noting in this case the also.
And what's in today's calendar?
Well, we have a rather easygoing Monday. I would be noting, though, that during the American session, we're getting Eurozone's preliminary consumer confidence indicator. It's expected to improve slightly, could provide some slight support for the euro. Other than that, though, we have a number of policymakers which could sway the market's opinion. I would be noting ECB President, Vice President De Guidos. And other than that, I would be also noting ECB's Lane, which is also the chief strategist. We're getting from the Richmond Fed President Barkin and San Francisco Fed President Daly. I would be placing more weight on Barkin. Barkin is a well-known hawk. And should he lean on the hawkish side once again, we may see the US dollar getting some support here. Other than that, in tomorrow's Asian session, we're getting from Australia the preliminary PMI figures. The same applies also from Japan. Should the indicators reading actually improve, we may see some support for the Aussie and JPY respectively.
And how about the rest of the week?
Once again, it's a rather easy-going week, but overall I would be noting that we may see some attention, or if you prefer, increased attention shifting from US stock markets towards the FX market, given also that most of the high-profile companies have already released their earnings reports. So that's an issue. On the other hand, we still have a number of issues and events which could generate substantial interest. Say, for example, tomorrow we are going to be getting also the preliminary PMI figures of the Eurozone. And I would be highlighting in this case the small problem child that would be Germany's manufacturing sector. Now, should we see that the manufacturing sector of Germany remains in the negatives, i.e. with reading below 50, that could weaken the euro somewhat. Other than that, I would be also noting that we're getting UK services sector PMI figure, which is also quite interesting. And on Wednesday, we start in the Asian session with New Zealand RBNZ interest rate decision. the bank may be hiking rates by 25 basis points. Should that be the case, we may see the Kiwi getting some support, especially if the accompanying statement also maintains a rather hawkish tone. I would also be noting in the European session UK CPI rates. And this is a biggie in the sense that Bank of England had a number of times warned, or at least stated that it expects that the CPI rates are to drop sharply. And it's going to be interesting whether that's going to be realized on Wednesday or not. Should there be no substantial drop of the UK CPI rates, then we may see the case of BOE being disproven, and that could cause the pound to rally. Other than that, on Wednesday, I would be highlighting also the Fed's meeting minutes of May. The minutes may provide some deeper insight as to the Fed's intentions. Should there be, once again, a more hawkish tone than what the market expects, we may see the US dollar getting some support. And then we're moving on to Thursday. I would be highlighting two events there. That would be from Turkey, CBRT's interest rate decision. More or less, the situation in Turkey seems to be stabilizing after its recent elections. By the way, we're going to be having a webinar at 3 o'clock today about Turkey. Should overall the bank though maintain rates unchanged and keep a rather dovish tone, that could weaken the Turkish lira further. Mind you that the lira has reached a new record low against the US dollar and it's still dropping. But I would be also highlighting from the US, and that would be, in my opinion, the main event of the day. The second estimate of the US GDP rate, it's for Q1. A possible acceleration could provide some support for the US dollar, leaving us on Friday with practically 3 releases that would be from Japan, Tokyo CPI rates. Mind you that the nationwide CPI rates accelerated unexpectedly last Friday. And I would also be noting from the UK the retail sales, and from the US the University of Michigan consumer sentiment. It's the final reading, yet nevertheless could create some volatility as it's known to change from preliminary to final reading.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to a technical analysis part of the presentation for today. My name is Peter Iosif, Senior Analyst at IronFX. Now in front of your screens, right now you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame, unless otherwise stated. Let me readjust a little bit the support and resistance labels, just so we get a clearer view here. So there are 2 elements which, in my opinion, stand apart from this for this chart. The first is that we saw a downward movement during Friday's American session, which more or less interrupted the upward movement. It was characteristic how it has broken the upward trend line guiding the index. And on the other hand, we note that the pair dropped, broke below the 103.05 support line, now turned to resistance. And note how during today's European session, the level already has started to provide some resistance. So we saw that the pair's price action tends to stabilize just below the R1. and that forces us to switch our bullish outlook in favor of a sideways motion, at least initially. Should the bulls take over, we may see the price action breaking above the 105 and start aiming for the 104.5. On the flip side, should the bears take over, we may see the price action dropping, breaking the 102.45 and start aiming for the 101.55. Let's have a look at Euro USD. We're adjusting the labels once again. Once again, we see how the price action has dropped, breaking the downward trend line, guiding the pair since the 11th of May. Note that it had started to drop since the 4th of May, but since the 11th it had intensified, and exactly this intense downward motion has been interrupted now with a sideways motion during the late American and today's Asian session. The pair seems to remain below the 1.0845 resistance line, so we tend to maintain a bias for a sideways motion. The RSI indicator is pretty close to the reading of 50. It's actually at 46.7, which may imply a rather indecisive market. I would expect the price action to remain between the R1 and the S1, and that would imply once again the stabilization and the sideways motion. On the other hand, note that there's still a downward slope in the 20, the 50, and the 100 moving averages. So practically, we may see some bearish tendencies here, and should that be the case, and we may see the bears taking full control over the pair, the first stop would be set at the S1 1.0715, with the next level being much lower. It's at the S2 1.0530. I wouldn't expect it to reach the S2 anytime soon, but in a strong bearish outlook, I would expect the pair to drop, break the S1 1.0715 and hover below it. That would also imply that the most likely bearish movement has restarted once again. On the flip side, should the bulls take over and lead the pair, we may see the price action of Euro USD rising, breaking the R1 1.0845 and start aiming for the R2 1.0965. Let's have a look at cable. So we'll position the labels once again. So we see practically how the price action has broken the downward trend line, guiding the pair since the 11th of May. We tend to maintain a bias for a sideways motion. Actually, we're switching our bearish outlook in favor of a sideways motion bias. And that sideways motion may be between the 1.2540 and the 1.2350. But we have to note here that the price action is actually pretty much narrow. The RSI indicator is also pretty close to the reading of 50. It's actually at 46.6, similar to Euro USD, also implying a rather indecisive market. Should the bears take over, we may see the price action dropping. Definitely a lower show than this one would be required, possibly breaking the S1 1.2350 and going in search of lower grounds. On the flip side, should the bulls take over, we may see the price action rising, breaking the R1 1.2540 and start aiming for the 1.2770. USD JPY. Okay, definitely the R1 has to be switched into a support line, given that the price action has broken above it and has actually bounced on it. So that's a clear sign of support. Let's move upwards. Let's go hunting. This is a beautiful support line and also a resistance line. I'm keeping that. In red, ladies and gents, this is the 145.15 resistance line. Readjusting. Let's reposition everything. Okay, we could widen it a little bit to the downside. $133.20. $135. 40, sorry. $137. Give me a sec. $137.75. There we go. 139.40. 142.20. And 145.15. Okay. Two issues. A, the upward motion of the price action of USDJPY has been interrupted. And that's evident by the fact that the price action has broken the upward trend line guiding the pair since the 11th of May. That's one. Second, the S1 137.17 has now been turned from a resistance line to a support line. And the main reason why is A, the price action has broken above it. B, the level has already provided some support during today's Asian session, European session. So overall, we tend to switch our bias for an upward motion in favor of a sideways motion bias, possibly along the S1 137.75. Should the bulls take over, I wouldn't be surprised to see the price action rising, and I would require it to break the 139.40 and start actively aiming for the 142.20. On the flip side, should the bears take over, I would expect the pair to drop below the S1 137.75. That's clear. It's the current level. And I would require it to reach the 135.40. Okay. Let's move now to USD CHF. Even if we readjust the upward trend line and shift a little bit to the right, the movement remains downwards and actually has broken the upward movement. So initially we switch our upward movement in favor of a sideways motion. But I would be highlighting the RSI here. It has dropped below the reading of 50 in a clear downward motion. It's actually has been nearing the reading of 30. It's actually right now at 40, 39.95. So a bearish sentiment seems to be building up, which if it's being maintained, we may see the bearish outlook more or less solidifying. In that case, we would expect the USD-CHF to drop below the S1, 0.8935, and start aiming for 0.8860. On the other hand, should the pair stabilize, I would expect it to bounce on the S1 and maintain a sideways motion, possibly between the R1 and the S1. For a bullish outlook, I would require the price action to reverse its downward motion and break the R1 0.9020, starting to aim for higher grounds. Let's have a look at AUD-USD. It's a very, very similar pattern. You can see how the price action has risen and has escaped its downward motion. Now it's in a sideways movement momentum, widely between the R1 0.6690 and the S1 0.6580, but overall we can see that the price action is far more tight. So more or less we tend to maintain a bias for the sideways motion in theory between the S1 and the R1, but in practice it's expected to be much narrower. Should the bears take over once again, we may see the price action dropping, breaking the S1 0.6580. And in that case, we may see it start aiming for the 0.6450. It's not going to reach as low, but definitely we need a clear break of the S1. On the other hand, should the bulls take over, I would require the pair to move decisively above the R1 0.6690 and start slowly but steadily aiming for the 0.68 resistance level. Moving now to USD CAD. Back in the forward chart, we're adjusting it. Okay, let's reposition the labels. Zooming it a little bit out. Here we go. Now we have a clear-cut sideways motion of USD CAD. It runs between the R1 1.3545 and the 1.34 support line. The RSI indicator is running along the reading of 50, implying a rather indecisive market. The Bollinger Bands have narrowed, also implying low volatility, which may allow the sideways motion to be maintained. And note how the 20, 50, and 100 moving averages have flattened out, once again highlighting the sideways motion, even supporting it through time. So we tend to maintain our bias for the sideways motion to continue. Should the bulls take over, I wouldn't be surprised to see the price action rising, breaking the R1 1.3545. And that may lead it to start aiming for the R2 1.3665 resistance line. On the flip side, should the bears take over, we may see the price action dropping, breaking the S1 1.34 support line and start aiming for the 1.3315. Let's have a look at the Kiwi as well. Okay, the Kiwi has broken above the R1 0.6270 and has stabilized. It's interesting how the former resistance line now turned to support. has provided some support here. Let's go hunting for a new ultimate. Oh, we have it. Okay. So we have it. Yep. Reposition the labels. Here we go. Let's correct them as well, starting with the S3 being placed at 0.6090. The S2 at 0.6190. We're talking about 100 pips up. The S1 at 0.6270, given that the price action has moved above it, now it's turned into a support line. The R1 at 0.6350. The R2 at 0.6430. And the R3 at 0.6535. Locking everything in. Now, despite the slight upward movement of the pair on Friday, its stabilization tends to highlight the possibility of the sideways motion being maintained. And the RSI indicator remains slightly above the reading of 50. Actually, it's at 57.4. May imply a slight residue of bullish sentiment here. But for the time being, we tend to maintain our bias for the sideways motion to be maintained. Should the bulls take over, given the slight residue of bullish sentiment, but also note how the moving averages, the 20 moving average of the Bollinger Bands and the 100 moving average, the 50 moving average, seem to have started to shift upwards, which may imply some bullish movement. And in that case, we may see the price action rising and aiming, if not reaching, the R1 0.6350. On the other hand, should the bears take over, I would expect the price action to drop, break the S1 0.6270, and start aiming for the S2 0.6190. Okay. Let's move away from the FX market. Let's have a look at gold. Gold should have risen slightly, and it did. Okay, there's lots to work here. Note how it has risen and broken above it. Definitely these two. The 2000 has to be turned into a resistance line. And we have to move and find a new ultimate support level. Okay, this true here is interesting, but nothing. I would go all the way down here. Maybe even here. Would be also interesting given that we have also some resistance, some support. Okay, let's keep it at that level. Let's be a little bit more prudent here. In green. And that would be the 1913.5. We're adjusting the chart. Let's reposition the labels. Starting with the R3, which is now being placed at 2050. R1 at 2020. Sorry, that's the R2. The R1 is being placed at 2000. The S1 at 1972. The S2 at 1945. And the S3 at 1913. Check that. Yep, still standing. Okay. So let's discuss direction. Now the first element which we have to note here would be the fact that the price action had a strong downward movement. Okay, let's start from here. Yeah. And that was interrupted. So A, we see that the downward movement of the precious metal's price has been interrupted. So we switch our bearish outlook, and the question is whether we switch it towards a bias for a sideways motion or a bullish outlook. The first sense here would be, that's the second element which we have to note here, is that the price action after correcting higher reached a peak and hasn't been able to surpass it, at least not yet. Also, the RSI indicator is at the reading of 50, implying a rather decisive market, actually right now at 49.995. So more or less, I think the sideways motion prevails here. And for bullish outlook, I would require the precious metal to rise and break above the R1 2000, which would allow us also to draw a new upward trend line. On the flip side, should the bears take over, we may see the price action dropping, breaking the S1 1972, and then it may start aiming for the S2 1945. Let's have a look also at WTI. Clear-cut sideways motion between the 73.90 and the 69.20. It's interesting how the commodities price tested the R1 once again on Friday. So we tend to maintain our bias for the sideways motion intact. The RSI indicator has dropped slightly below with a reading of 50. It's actually right now back at it at 49.3. So we tend to imply more or less once again that the sideways motion bias remains intact. Should the bulls take over, I wouldn't expect the price action to do anything less than breaking the R1 73.90. It's a level that has been tested to the upside once, twice, 3 times, 4 times, 5 times, and held its ground. If the pair does not break the R1, there is no bullish outlook. And actually, breaking the R1 is not enough. It has to actually reach the R2 76.80. So we have to see a movement of gold rising above the 73.90, which practically is highlighting the upper boundary of its current sideways motion. It has to break that. And it has to start aiming, if not even reach, the 76.80. Actually, I would like to see it reaching the R2 before switching in favor of a clear-cut bullish outlook. On the other hand, should the bears take over, I would expect the price action to drop a lower true than this one, marking the 69.20 would be required. And in that case, we may see the price action breaking the S1 and start aiming for the S2 64.30. Let's go to US stock markets and starting with the Dow Jones. Once again in a sideways motion. Okay, it broke slightly above the 133,000. And actually, I'm going to be readjusting the levels here. We can see a clear-cut support line once here, twice here. So that would be a very indicative level. 32,980. I would be going a little bit higher with the first resistance line, actually marking one peak here, also here, and also support here and here. So that's very indicative as well. And that would be the 33,660. I'm going to be raising a little bit the R2 here. 34,275. And then we move to the support lines. Let's open this up. Note this true here. Quite interesting how it provides support, but note also how this level provided resistance. Could be slightly higher, something like this. Note how this level provided the platform upon which the index started to rise. Once again, they initially started here, but there was a correction. Here was support, and then it went all the way up. So that's a level to take note of, and that would be the 32,330. And S3 moves decisively higher at this level. $31,485. So for the time being, we tend to maintain a bias for the sideways motion to continue for Dow Jones. And I think that's more than evident, most probably between the 33,660 and the 32,980. There are two elements which tend to support the idea of a sideways motion. Actually three. A, the fact that there was a slight downward trend line which has been broken. B, is that the index has tested once again the R1 and has failed to break it. C, the fact that the RSI indicator is running along the reading of 50. All of that tend to imply a sideways motion. So that should sum it up from all of us here at IronFX. Best wishes for solid trading.
Hello and welcome to another informative video. In today's video, we'll be looking at earnings per share. Earnings per share, or EPS, is a financial measure that calculates the profitability of a company. It does this by dividing a company's profit by the number of its outstanding shares. EPS is very important to traders because it indicates how much a company earns for each of its shares. Investors also typically pay more for shares if they think the company has higher profits relative to the price of those shares. While as a CFDs trader, you won't actually trade the real share, but contract for difference on shares, it is important to be aware of company earnings and how well a company is doing, so you can trade CFDs on shares confidently. A company is generally considered to be more profitable the higher its EPS. Two different formulas are usually used to calculate EPS. The first formula is to take the company's income after tax and divide it by its total number of outstanding shares. The second formula is called the weighted earnings per share. Here, an investor would take the company's net income after tax, subtract total dividends, and divide this number by the total sum of outstanding shares. Also, investors will use EPS to measure a company's PE ratio, further helping them to identify the value of a company and its shares. Although a useful metric for traders, EPS is only meaningful if compared against other competitor companies operating in the same sector. If you're trading CFDs on shares, as always, be mindful of the risk that comes with trading. Do your research and be cautious to minimize your losses. Thank you for watching.
Right, I bet you guys can see my screen clearly right now. All right, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over a period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular training chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying X period moving average. All right, therefore finding ourselves with a slow percentage K, and then to get the signal line, we smooth the data further by applying another X period moving average to slow percentage K, and now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slow percentage K and the slow percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5,3,3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings are more than 80 will indicate the price is near its high, and readings that are above 20. So readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit, we are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case that stochastic, how can they identify in terms of divergence, right? So in the first few slides, you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also an indication of a divergence, which in this case we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we're looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastics hidden resistance level, coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Okay, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right. So let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try out. Yeah, we are looking at a downward moving channel. A bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on H4, it is still moving a sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel. Hold on. Yeah, it was a downward moving channel, but you can see that price has broke out of the channel. For Aussie dollar, let's look at 1-day chart. Very obvious, very nice channel. On the 1-day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bounce off in this area. Let's use our projection. drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candle wick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. Right, so we are seeing that there's a chance where price will drop slightly a bit more and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay, I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support turn resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. We can see that there is a support turn resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe we should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. It's a relatively flat downtrend that we are seeing. Some form of resistance over here. Completes a V-shaped recovery. Let's look at H4. Depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, the upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards the resistance on the bigger time frame, like on the weekly, price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. There is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a Nike tick reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 272 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down. So look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see is there any chance of divergence. No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing QE Aussie QE in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. There's a franc yen. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious. The nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yeah, it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar CAD it is. No particular channel or anything, but there is a upward moving slope. So daily slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Let's look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. Would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support, the resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry. 100% for entry as well. Very nice triangles. Yep, that's about it for dollar CAD. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting, interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. CAD yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. Still trying to climb upwards. I'll say for the short time being, it will be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep, so looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely heading for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY. Seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.